On April 11th, the global gold market witnessed a historic moment. The main contract of New York gold futures soared during trading, hitting a new high of $3,263 per ounce. 1 ounce of gold is equivalent to 31.1035 grams. According to the latest RMB exchange rate, approximately 7.28 yuan can be exchanged for $1. From this, we can calculate that currently, the international gold price has exceeded 760 yuan per gram in RMB, and the price of pure gold jewelry in the market is expected to approach 1,000 yuan per gram in RMB. At the end of October 2022, the international gold price was only around $1,620 per ounce. It has doubled in just 2.5 years. However, looking at the price chart, the recent performance of the gold price has been rather contradictory. When Trump's tariff policy was first announced, the US stock market plummeted, and so did commodities. Logically speaking, at such a time, safe haven funds should have flowed into gold and Bitcoin. But for a while, both gold and Bitcoin also experienced significant declines. Of course, there is a rational explanation behind this. For example, when a major risk emerges, people tend to hold cash and sell off all assets, or sell gold to solve cash flow crises. Therefore, even a strong safe haven asset like gold can temporarily lose its effectiveness. When Trump announced that more than 70 countries would suspend the implementation of reciprocal tariffs within 90 days, the market believed that although the risks still existed, they had been significantly reduced. As a result, the gold price rebounded strongly for 3 consecutive days and reached a new high recently. The next question is, how will the gold price evolve? Will it break through $1,000? No one can predict accurately because Trump's unpredictability is bound to bring new shocks to the international financial market. If the tariff policy remains erratic after 90 days, we cannot rule out the possibility that the gold price will continue to rise to $4,000. The logic behind the sharp increase in the gold price is not only related to safe haven demand, but also includes the lack of trust in credit of the US government, or in other words, the distrust of the US dollar. As is well known, any paper currency will depreciate in the long run, and even the US dollar, the most powerful currency, is no exception. When the Bretton Woods system was established, it was stipulated that $35 could be exchanged for 1 ounce of gold, and at that time, $1 contained 0.888671 grams of gold. Today, it takes $3,255.70 to exchange for 1 ounce of gold. In the common expression of the public, the US dollar has depreciated about 93 times against gold in 80 years. Now, $1 only contains 0.00955 grams of gold. Of course, other major currencies in the world have depreciated even more against gold during this period. We know that the basic pattern of the current international order was formed after World War II. Now, the international community has reached many consensuses on how to cooperate, negotiate, and avoid wars, and there is a complete set of technical guidelines, which was lacking before World War II. At that time, the international order was still in the stage of a jungle society, and globalized trade has made countries even more reluctant to see instability, as they understand the benefits of making money quietly, which further consolidates the global order. However, now the possibility of a hot war or a large-scale chaotic war in the world is increasing. The global economic foundation established after World War II has shown significant cracks. For China, the economic model established since the reform and opening up is facing unprecedented challenges. Since World War II, the de facto foundation of global trade and finance has been the US dollar. In 1944, 44 countries held a conference in Bretton Woods, New Hampshire, in the United States and established the international monetary system centered on the US dollar, which is the Bretton Woods system that still has an impact today. The core content of this system is that the US dollar is pegged to gold, and the currencies of other countries are pegged to the US dollar. After the Bretton Woods system, the US dollar became the only currency pegged to gold, that is, the global anchor currency, and then the US dollar hegemony began. It was not until Nixon, the previous US president who imposed tough tariffs, that the status of the US dollar began to waver. In 1971, US President Nixon announced the closure of the gold window and no longer allowed foreign central banks to exchange US dollars for gold. Due to the high expenditure of the Vietnam War, the US dollar was overissued, and countries like France began to exchange US dollars for gold, resulting in a significant loss of US gold reserves. Closing the gold window meant the end of the Bretton Woods system, and the world entered the era of floating exchange rates. Although the US dollar lost its direct link with gold due to its strong liquidity and the strength of the US economy, it still continued to serve as the main international reserve currency. After the first oil crisis in 1973, the United States reached an agreement with Saudi Arabia. Saudi Arabia priced and traded oil in US dollars, and the United States provided military protection and political support. Since then, the so-called petrodollar system has gradually taken shape. As the world needs to use US dollars to buy oil, countries must hold US dollars. Although the US dollar is no longer pegged to gold, it has established a new credit pillar through oil, a real asset, and maintained its dominant position. In order to maintain the status of the US dollar, the United States must deeply intervene in Middle East affairs to ensure its control over the oil-producing countries in the Gulf. In the late 1970s, China announced its reform and opening up. Since then, the global economy has formed a G2 system of China and the United States. The United States provides liquidity for international trade through its trade deficit, while China keeps global inflation in check through massive exports. That is, the so-called pattern of China producing and the United States consuming. Under this model, China's coastal export enterprises and US multinational corporations have become the biggest winners. The former has created hundreds of millions of jobs, and the latter's overseas profits have supported the continuous rise of their stock prices. However, under this model, American blue-collar workers have been left behind by the times. With the migration of orders, the manufacturing industry in the United States has also been transferred to other countries one after another. For the United States, the US dollar system is both a tool for reaping wealth and the price of social division. This model is difficult to maintain in the long run because the fundamental contradictions caused by the long-term overvaluation of the US dollar have become extremely acute. When we say the US dollar is overvalued, we mean that its current exchange rate level is higher than the value it should have based on the economic fundamentals. This has led to US export products being more expensive in the international market, weakening the competitiveness of the US manufacturing industry. The United States has long maintained a trade deficit, importing a large amount and exporting a small amount, and capital has continuously flowed into the US financial market rather than the real economy. At the same time, the United States is heavily in debt and has accumulated many problems that are difficult to solve. As we can see, Trump tried to cure these problems of the United States, so he launched a tariff war, that is, by impacting global trade. He aimed to achieve the triple tasks of reshaping the US balance of payments, bringing the manufacturing industry back, and resolving US debt. It's like using the most potent medicine to treat the disease. We don't know if the disease can be cured, but the side effects have already emerged. That is, Trump's policies have continuously overdrawn the sovereign credit of the United States and accelerated the distrust of the US dollar system in other regions. As early as a few years ago, the central banks of countries with poor relations with the United States have been increasing their gold holdings. And increasing gold holdings itself is a vote of no confidence in the US dollar system. On April 7th, according to the data released by China's State Administration of Foreign Exchange, as of the end of March, China's gold reserve scale reached 73.7 million ounces, an increase of 90,000 ounces compared with the end of February. It has been the fifth consecutive month of increasing gold holdings. On March 31st, the Vice Chairman of the National Council for Social Security Fund of China met with the CEO of the World Gold Council, and the two sides exchanged views on issues such as the investment prospects of gold. That is, after the domestic relaxation of the restrictions on insurance funds' purchase of gold, the Social Security Fund may also join the ranks of buying gold. In Europe, more and more people hope to transfer physical assets such as gold to Europe. On April 8th, The CEO of the Euronext exchange said that some European investors were uneasy about the trade policies of the Trump administration, and they began to withdraw their gold from the United States. There are also reports that the German government is considering withdrawing 1,200 tons of gold from the United States. After World War II, Germany accumulated a large amount of gold reserves through long-term export surpluses, and its reserve amount is second only to that of the United States. Currently, its official stock is 3,352 tons, of which about 1,236 tons are stored in the Federal Reserve Bank. Analysts pointed out that if Germany withdraws its gold reserves from the United States, it means that the safety and credibility of the Federal Reserve are being questioned, which may trigger a chain reaction. With the intensification of geopolitical tensions, more countries may withdraw their gold reserves stored in the United States. And once this really happens, it is likely to be the day when the US dollar system collapses. Surely some people will say that the US dollar has already been decoupled from gold. Even if Germany withdraws its gold now, the US dollar will still be the US dollar. How could it collapse? In fact, even though the US dollar has been decoupled from gold, the US dollar has inherited historical value from gold, which is the key to its value. According to the data of the US Treasury Department, the gold inventory in Fort Knox, the United States, exceeds 147 million ounces, which is approximately 4,570 tons. And according to the data provided by the World Gold Council, the US gold reserves reach 8,133.46 tons, which is the highest in the world, more than twice that of Germany's gold reserves. Therefore, the US dollar still has the backing of gold. If countries start to sell off US dollar assets one after another and deplete the US gold reserves, the credit of the US dollar will inevitably collapse. Some people may say again, isn't this a good thing? It would be better if the US dollar hegemony collapses. But in fact, things are not that simple, because the US dollar is the biggest grey rhino in the global financial architecture. Once it collapses, no one will be spared. This will be a disaster in the economic field, and a devastating economic and financial crisis will occur. To be more specific, the credit and liquidity of the US dollar are the foundation of an entire system. Especially for emerging countries, they hold a large amount of US dollar debt and use the liquidity of the US dollar as the basis for repayment. In addition, central banks around the world also conduct reserve work of the financial architecture centered on the US dollar. The US dollar is still the most important foreign exchange reserve globally. Due to this deep binding, once the credit of the US dollar collapses, all countries in the world will be affected. When central banks around the world reduce their holdings of US Treasury bonds, it will impact the prices of global financial assets, trigger a round of sovereign debt crises and corporate default waves. The originally unified US dollar settlement system will disintegrate, trade pricing will be fragmented, and the global real economy will be hit by both credit tightening and trade contraction. In fact, the reason why the US dollar can still maintain its international currency status despite continuous issuance and depreciation is that so far, no currency can replace the US dollar. This is not only a matter of ability but also a matter of willingness. On the other hand, this is a world of competing in badness. Compared with other currencies, the issuance of the US dollar is still relatively restrained. But this does not mean that this system can be maintained indefinitely. The continuous increase in the value of gold is precisely because the status of the US dollar has been shaken. In fact, in the next 10 to 20 years, the international situation and international trade will fluctuate violently. In this process, the safe haven function of gold will be magnified again. It is possible that the United States and its allies will rely on cryptocurrencies for hedging, while other countries will rely on gold. Therefore, in the medium to long term, the price of gold will still rise. But in the short term, it is difficult to predict whether it will rise or fall. So, as the saying goes, it is always appropriate to allocate a certain proportion of gold in your assets at any time. This part of the gold assets should not care about the rate of return and should not be easily cashed in. It is mainly used to guard against those unpredictable risks.